Hello everyone, hope you are doing well. Welcome to another episode of Monday Markets. Now, to me personally, altcoins are very boring this week, so most of our focus will be on Bitcoin and ETH. Hopefully that will be helpful. As far as the monthly time frame goes, again, we spoke mostly about the close last week. It's only first 5 days into the month, so not expecting to get a lot of insight from the price action right now. One thing that might be worth doing and keeping a track on later in the month is if we just map where the monthly open is, sort of in the final week or two of December, we can start to get a feel for how the monthly is going to close. Is it above the open, below it? Is it support? Is it resistance? I expect some oscillation around this level early in the month, but again, it's the sort of second half or final quarter of the month that may be a bit more helpful as an indicator. But for the time being, not much has changed. As we discussed last week, the monthly did close as a bearish engulfing, which is to say it moved above previous month's high and closed below previous month's low. So that kind of sets the directional bias for the month. And as we've discussed, if we're going to stick to purely monthly time frame structure, we have support at 14k and resistance at the pre-breakdown range at 20k. So in terms of the information that the monthly time frame can give us, that's about the extent of it. So with that in mind, let's go down to the weekly. Now, what has changed on the weekly? Not a whole lot, to be honest with you. One thing I will note is that we do have across both Bitcoin and ETH some sort of swing low structure formed here. We've got a low, a lower low, and a higher low. So that's some form of candle structure to be aware of. But that in itself kind of isn't enough for me personally. I like to trade candle structure, and there isn't a whole lot going on here. As we've discussed, if it were to push back into the pre-breakdown range, that would be weekly candle structure. If it were to fall towards the sort of monthly and weekly level of support closer to 12k, that will be candle structure. But for the moment, there's not a whole lot on the weekly time frame that's particularly telling if that's our indicator. One thing I will note that's interesting on the weekly time frame is actually paying attention to previous weeks high and low. So if we take a look at where that falls, you can see that we have previous week's high come in at 17.3, and at the moment the market has poked above it and sold off a little. Now, again, it's the start of the week, so those types of signals themselves aren't terribly instructive. That's just the market finding some resistance at the top of the range. But again, as we get closer to the close, we can start to build some sort of understanding of whether this is going to be any type of weekly expansion or whether to look for lower prices and sort of more range-bound price action. Generally speaking, with these types of previous weeks' highs and lows, I prefer them when they happen on inside weeks because that tends to provide a bit more signal. But generally speaking, with this type of framework, if you're finding resistance at the previous week's high and the market closes in that type of fashion, again, it's Monday, so it all comes with caveats, we'd generally be looking for a move towards the low of that same candlestick. Essentially, the candlestick acts as a range, high and low, like you would have in any type of support resistance structure. If it got stuck at the high, you'd expect a move towards the low. Specifically, you could also just break it down a bit further and have the high, low, and the mid, and kind of slice it down that way. You don't have to, and again, it's early days, but in terms of our higher time frame context, what can we derive from the monthly and the weekly? From the monthly, we have the monthly open, which will become relevant later in the month. From the weekly, we have previous week's high, which will be more useful after the week closes or again into the weekly close itself, but still some levels worth bearing in mind. Most of the commentary will be centered around the daily time frame. That's where we have the most data. That's where we have the most candlesticks. As you know, we're not at monthly or weekly structure at 19k. We're not at monthly and weekly structure at 12 to 14k, so the daily time frame is really what we're going to use to anchor ourselves. And as before, we're in the same range from the range low at 16k, range high at 17.6, and a range midpoint at 16.7. Now, the way that price actions progressed in the past week or so, it's kind of just been stair-stepping up towards the range high. Unfortunately, it hasn't filled any of the kind of short-term trades I was looking to take on this thing based on this range. You'll know I tried to buy the range low retest, no luck, and I was looking to do business at the range midpoint, no luck either, which is fine. And I took some other punts, which I tweeted about throughout the week, but for the time being, this is where we're at. So just big picture first, in terms of developments for later on this week, if the market dips, your first call of support is the range midpoint at around 16.7 or thereabouts, and then if that holds, you'd expect a move towards the range high. For any type of higher conviction bearishness or even short-term short setups or short-term bearish setups, it kind of has to happen at or around the range high for me. So the range midpoint is always a bit of a wash. I'll take intraday trades based off of it, but not really swing ideas. That's where the whole don't diddle in the middle comes from. It's really the range high that's remained the most untested portion of this consolidation. So anything there, either for short-term trading back towards those higher time frame opens, or even say the market were to come up and close through the structure and then close back below it, any sort of range-bound type of price action at the range high would suffice. I mean, for example, you can consider what happened at the range low, which is when the market came in, closed below, wasn't accepted, and then pushed up. If we're really stuck in range-bound conditions, you'd expect similar behavior at the range high. So just like here, prices through the range weren't accepted, we can have a world where prices through the range aren't accepted, and you look for a reversion to the other side. So that's kind of what I'm open-minded towards, but the market's getting stuck a bit before that. And that's kind of it. I think it's important to zoom out and pay attention to sort of the context of the market. We're not at any high time frame levels or sort of big monthly and weekly structures. We're still trading within this daily range. The range low failed, as in failed to break down. The range high is the logical target for that type of move, and your intraday trading will be informed by the substructures within this consolidation. Monthly open previous week's high at around 17.1, 17.3, and the nearest high time frame possible pivot, again, it's the range midpoint's not super conviction, but possible pivot is the 16.7 range midpoint. And that's kind of it for the time being. You can see, even if we look at this 4-hour consolidation itself, it sort of aligns with the high time frame idea that we posited. So here you had, range high or resistance at around 17.1. If you look on the other side of the range, you've got range low / support at 16.8, and that more or less aligns with our higher time frame levels. So that's why sort of the granular low time frame analysis isn't as helpful or perhaps as necessary, because it sort of all overlaps with the daily range that we've outlined. In terms of potentially, how would the market perhaps reach this range high? One way of doing it would be to invalidate what's looking like a failed breakout attempt at the moment, which is to say, if we kind of zoom in on that same 4-hour consolidation, you can see that the market tried to break above that level into the previous week's high and monthly open and wasn't accepted. So if during the course of this week, for some reason, this kind of sell-off gets absorbed and you eventually do get a move back above previous week's high and higher, that there may be a setup available there to take you from previous week's high into the top of the range, maybe with a slight excess like we saw to the downside. Hardly the biggest setup in the world, and God knows what the exact entry triggers there would be, depending on the price action, how it gets there, when it gets there, and so on and so forth. But in terms of just like immediate kind of short-term price action, there's resistance at 17.6. There is support at 16.8. At the moment, the market tried to break out from the range high and wasn't successful. Ordinarily, in a sort of vacuum, you'd expect a test or even a similar type of overshoot to the range low, and then that's sort of where those higher time frame ideas may become actionable or come to fruition. So that's kind of the the view on Bitcoin and the trading levels that at the very least I'm paying attention to. I look forward to next week's video, because by then hopefully we'll either have some resolution as to whether the midpoint is going to hold as support or resistance, or some sort of setup at the range high. And those two areas are kind of a bit more attractive than where the market is now, because it's kind of pulling back, but it's not pulling back from like a particularly significant resistance, and the pullbacks that it has had hasn't spent enough time at the range midpoint to form a decisive view, so it's sort of in between levels at the moment. I don't think there's anything else. I think the 4-hour is about as granular as you're going to get. Again, if you're particularly short-term oriented, just map out this consolidation, this range that we spoke about, which lines up with the high time frame levels, and our normal rules of engagement as far as this thing goes are applicable. So hopefully that's helpful. As far as ETH goes, some interesting structural divergence there. Again, the monthly close on ETH wasn't as bearish as it was on BTC USD, which was a full-on sort of bearish engulfing. On the ETH side, it did close as a lower low close after spiking previous month's high, but it also just held support, right? The sort of previous cycle's highest close, market came back, close below, close above, come back, retest, and that's holding. Fine. So nothing overtly sort of negative on the monthly time frame at the moment. Obviously, the biggest sort of swing short setup would be losing this support level on a monthly or weekly basis. You know, below 1.1k, the whole idea of ETH being relatively stronger and all that type of stuff, that goes out the window, and it probably just starts catching up to the downside. So I think any bullish ideas or bullish views values on ETH are contingent on 1.1k and the current range low holding. As far as how that manifests on the weekly time frame, it's like I don't like this weekly chart, and the reason I say that is because this sort of mini consolidation before the most recent leg up, it's just very cluttered and not particularly clear in terms of either levels or candle structure. So I do have it mapped on my chart in one form or another. This sort of low before the high. Between what is this? Basically at around 1.3k. I do think it's valid weekly structure, and that's where the markets kind of slow down a little bit. But I'm not completely in love with it, and so I'm sort of the jury's out on that one as far as the quality of this specific weekly level goes. And if the market were to rally over the course of just this week, if we look at the sort of weekly market structure, it's bearish at the moment, right? If you look at a line chart as well as another way of showing this, you've got a high, a low, lower high, lower low, lower high, lower low. I mean, this is a very dominant weekly trend and sort of area of weekly market structure. So until it forms a higher high on the weekly time frame, I don't have a strong reason from a market structure point of view to argue for a reversal. And at the very least, if it does chooses to push through this clunky area, which is completely understandable, my eye for a lower high, which somehow rhymes, would be drawn towards this awkward range low in the 1400 area, which is also previous cycle all-time high, and I think it's a pretty deep retracement level for this leg as a whole, sort of landing it around that 60 to 70% retracement. If we look at that, almost perfectly lines up with the 618 fib, whatever you want to call it, that there's a lot of confluence at around 1.4k. So I guess the important takeaways is that weekly market structure is still bearish. There is some resistance at this 1.3k level, but it's better on the daily than it is on the weekly. If the weekly does choose to rally through this area, then I think there's a really decent setup in the form of trend continuation for another lower high, or at least the area to look for it is around the 1.4 to 1.5k handle. So that's something to bear in mind if this consolidation breaks to the upside, and it's really on the daily time frame where we'd get our first signs of that. So using a similar range as we had for BTC USD, if we look at this same type of structure, lowest close, highest close, so 1.1k, 1.3k, 1.2k range midpoint, unlike BTC USD, ETH has actually already reached its range high and it's finding resistance there at the moment. Specifically, if you look at how the market unfolded at this range high, you had the test of the structure, a couple of inside days, and then this is the bearish engulfing day. Again, bearish engulfing, the market spiked previous day's high and closed below the low of that same day. And so any rallies into that resistance, you have the confluence of a daily bias working in your favor. And so in terms of the levels, again, a zoomed out perspective, we're currently, and by the way, this is where this awkward weekly block comes from. It's basically this entire range before the run up, nuke through it, and now it's acting as resistance. So there is some confluence with this range high and the weekly structure. I just said it looks better on the daily time frame because on the daily we have the benefit of being able to use these sort of range structures, if you will. So at the moment the market's at resistance. That's fairly self-evident. I think if that kind of higher time frame continuation, if that weekly squeeze that we talked about has any chance of playing out, it has to be off the back of at least a daily close above 1.3k. And then if that happens, at the very, look, it's probably not the best setup in the world, but at the very least you have an invalidation in that case, likely in the form of whatever low, the low of the candle that breaks the level, right? So whichever daily closes through that level, just the low of that day is probably a decent invalidation for these types of quick and dirty breakout trades. And then your target, as I mentioned, would be that 1.4, 1.5k area on the weekly time frame. So that's if the range expands to the upside. I think a daily close through there would be a decent signal at the very least. Again, I can't forecast the future and tell you how it's going to look, how it's going to get there, how the market sets up, but purely in terms of structure, daily acceptance above the range high, 1.3k plus, that probably at least increases the probability of that 1.4, 1.5k rotation. If we take the market at face value in terms of what it's telling us right now, it's finding resistance at the range high. Similarly, it didn't offer any kind of convincing retests or bounces at the range midpoint. So in terms of intra-week bias, if this thing continues to get stuck and this kind of price action we're seeing right now ends up being more or less distribution in nature, then the first area to play any type of low time frame bounces would be the 1.2k range midpoint. And I also think it's the point of control within this range itself, which is not something I look at all the time. But if we take our fixed range volume profile tool, just to give us an eye test in terms of where the market might be, and go from range low to range high, you can kind of see that within this consolidation, one of the meteor chunks, I don't think it's exactly the point of control, but it's a high volume node, happens to fall, unsurprisingly, around the range midpoint as well. So there are some factors for a bounce should the market pull back to that point, even if it is, as I mentioned, for a short-term type of day trade type of strategy. So for example, market for whatever reasons falls to the range midpoint, tries to break there, no acceptance. Whatever happens there, it's acceptable for me within my trading system on the low timeframes to look for a bounce from the range midpoint into a lower time frame level of resistance and say it's this support that the market's using right now. So something like that would be acceptable, but within the bit larger confines of this consolidation, if the range higher is going to be resistance, your next stops are ordinarily the range midpoint and the range low if that rolls over. So again, this is a range bound environment. We sort of know how to approach these, right? Generally speaking, you trade level to level. So from range low to range midpoint to range high, or range midpoint, or the other way around, from range high to range midpoint to range low, taking it one level at a time. Another thing we do is, generally speaking, if the market tries to break from one of the extremities, that's to say the range high and range low, and it fails to do so and is not accepted, then that sort of adds confidence to the idea that whatever attempt to break from the range ends up being an excess or a deviation, and we typically target the nearest levels, if not the extreme. So if during the course of the week the market tries to poke and falls back within, or to the downside as well, tries to poke, so I should do this really, tries to poke and falls back within, those setups at the extremities tend to be the more attractive ones. So for example, if we take that type of daily time frame idea where I said, daily close above 1.3k is good to go, and it closes above and then gets completely smoked and eats shit, then that would completely revert my bias, and then I would not treat that as a breakout. I would treat it as a failed breakout and then target the range midpoint, range low, so on and so forth. So I've still been very much on sort of day trading mode where appropriate with these markets. It should come as no surprise that at the moment, at least, none of the swing strategies have been particularly interesting or relevant. Not with Bitcoin at 15, 16k, 17k, thereabouts. Those aren't the kind of high time frame anchors that I'm looking for. So it's very much one level at a time, intraday type of stuff for the time being. So ETH is a bit clearer than Bitcoin, because Bitcoin started pulling back at kind of an awkward spot, not having reached its range high, whereas ETH has. So that's perhaps one worth paying attention to. So again, daily close above, as long as it doesn't turn into a deviation. 1.3 to 1.4, 1.5 is acceptable. Any pullbacks into 1.2, especially if it kind of sets up nicely and fails to break down, is accepted back above. That's sort of valid for a low time frame or day trading setup from daily mid-range into whatever intraday level of resistance. And then obviously if it falls to the range low, that would be quite an extreme move for the week itself, but same rules apply. Support is support until proven otherwise. Resistance is resistance until proven otherwise. And don't diddle in the middle unless it's for short time frame strategies or the setup is really good. Again, for alts, not super interesting. Maybe there'll be more to talk about next week. I took a trade off of this BNB structure here that I tweeted about. That was a very low time frame setup. At the moment, it's kind of fallen towards the range midpoint of that same consolidation. So not a whole lot going on there that's terribly interesting. Dogecoin has continued its march up. But it hasn't reached this pre-breakout cluster at around 12 cents. So nothing to do here. And I don't really like this type of sort of stair-steppy price action either. So not a whole lot going on at the moment, and nothing really catching my eye from that point of view. Litecoin did break out, or it's kind of continued to break out for the time being. I would just follow Don on this, to be honest. He's been the one very actively trading this. So, and been posting updates as well. So he's been good. For me, in terms of levels, the first one where I could really get interested is closer to the 69 handle. No surprise that I'm interested in 69, but, that didn't reach on the pullback here. And at the moment, it's kind of attempting a breakout through its most recent high. So not at any levels that are terribly compelling. If we look at it on the weekly time frame, unfortunately for me, it becomes even less actionable because what we have is a close above what should, well, actually it closed at this kind of $80 level of resistance last week, and then a surged above it sort of early in the week. So there is a world in which I can fade this move, but it would have to be... let me take a look. I mean, I'm sort of debating as to whether I can fade this if it gets back below weekly resistance on some sort of intraday basis, even treating it as a range here. I'm kind of open to that idea. The only issue I'm being sort of reluctant is because this has been the strongest thing in the market, right? Look, the entire watch list is red, and this thing is up 6%. So if I'm going to be selling stuff, I'm not sure if selling the strongest one is the best idea, especially given there are so many weaker pairs in the market. So I guess that you could keep your eye on this, but it's not top of my list in terms of, oh, this thing went up a lot, so I'm going to sell it. That's not generally how I think about these things. If this thing went up a lot, unless I have really strong reasons for thinking it was mispriced or it broke something or, whatever, the fair value for this thing in my head is miles away from, where the market is, then generally speaking, the fact that it's gone up a lot suggests it's strong, and I don't want to fade strong stuff unless I've got very good reasons to. So especially when there's other much weaker stuff to get on board short. So I'd keep an eye on this thing, if not at least because it's been one of the strongest performers in the market. So maybe it'll give us some hints if it's going to roll over or whatever else it's going to do. But in terms of like ideas, it's not particularly high on my radar. Generally speaking, if this thing is going to roll over and look really garbage, you basically need this entire consolidation to fail. As you know, we like to trade these structures which have an impulse, consolidate, impulse again, and it's the consolidation sandwiched between impulses that tends to act for a good pivot. If the market comes into it, typically support and so on and so forth. So on a swing basis, if this thing is going to look like total garbage, you'd want to see the entire consolidation fail. So anywhere from sort of 78 to 74. This block basically that preceded this most recent breakout attempt. If this thing started to look cooked, you want to see an underside of that and then completely puke even through that 69 level we talked about, and then this whole thing ends up being the deviation, and then then it starts to look garbage. But yeah, not spending a ton of time thinking about Litecoin for the time being. You can. It's got decent kind of horizontal structure to work with, but again, its outlier performance means that if I'm going to be short oriented, it's not going to be top of my list. And for longs, as I said, I don't have anything going on here. It closed at weekly resistance, so unless it wants to come back to this daily level, for some sort of hit and run setup where I sort of buy the level and then close it at a lower time frame level resistance, something like that. That's fine, but I feel like I'm just rambling on about this thing for no great reason. That's sort of some Litecoin coverage there. And as I said, Don's been doing a great management and all sorts of stuff with it on his feed, so go check that out. And nothing else on altcoins, to be totally honest with you. A very boring week, at least from my perspective, in terms of where these things ended up. No closes above the 14 level on Solana. Ape, I mean, it's sort of awkwardly just about closed through this weekly structure. So maybe next week, if I get a clean close below, I can look for continuation towards the lows. So that's one that's pending, but hasn't sort of done anything or triggered any ideas yet. AVAC's just not terribly interested in trading. And the DeFi stuff, narratively, I'm not fully there yet. On the S&P front, this thing has been causing a bit, it's been a bit calamitous for crypto, showing some weakness on the open and today. I don't think my views have changed as far as having a line in the sand around the 3900 handle, as you'll recall. So as long as that stays intact, I think crypto can sort of not do its own thing necessarily, but at least it's not like an immediate headwind in its face. But if this basically keeps going as it is, it'll start to look bad, because it will mean that this entire daily engulfing candle will have been retraced, and then we're dealing with the pivot off the back of some ugly price action. So I wouldn't read into this too much for the time being. I mean, obviously, on its face, it doesn't look great, but this price action is just very dodgy, and I would pay more attention and give more weight to the 3900 pivot. And I think there's some economic data on the Friday, but hasn't been as impactful as in the past. I just think, as before, sometimes the market just gives you a nice line in the sand, the 3900 handle in this case, and that's where I will pay most attention. That's all from me. A bit of a short one, primarily Bitcoin and ETH coverage. Altcoins aren't doing much, and the S&P is all the same. As always, thank you for watching. Hope you've been enjoying Technical Roundup. Newsletter comes out tomorrow. It's our free weekly newsletter, trletter.com. Go sign up and read what we have to say about these markets. Like, subscribe, YouTube stuff. Thank you for your support. I hope you had an excellent weekend, and I'll see you later on this week. Cheers.